In this video, we are going to talk about the investor side of the marketplace business and why it is important. We all think of marketplace as something which comprises of just vendors and customers, but we rarely think about investors. Now, if you're a startup founder, you're interested in raising money, investor side of the marketplace is critical. And why? In the early days, all you have is sunk cost because pro- the cost of building the product and cost of marketing is substantial, and without investors, you cannot go very far. So it's important. Therefore, it's important to have that perspective in mind while you are working on your product and its marketing. How it will it appeal to investors? Will they be interested in your idea? The good news is marketplace by itself offers a substantial and significant barrier to entry, provided you have you have a very you have you have a formidable supply and you have a lot of demand. So by itself, that it's a significant barrier to entry and a proof that your idea is viable and investors are interested. So let us look at some of the reasons investors would care about to invest in you and what they look for. So, number one, the thing that investors look for is a gritty team that responds to changes and an expanded market rapidly. What I mean by grit here is dynamic grit. That means if you have evidence to show that how you responded to a crisis, and if you have sales metrics as evidence. So now in these times of COVID, companies and entrepreneurs that have changed their business model to make them useful or relevant to consumers during these times, well, they have shown active grit. And that's what I mean by a gritty team. The second thing investors look for is a well differentiated and a useful product that solves a customer's pain. It's the nice to have products. We all know that what happened during these COVID times, when people are not buying and suddenly their sales drop, they go out of business. So that's what I mean by like a nice to have product. And also, investors always want return on investment several times, like 1000x, north of 1000x multiple of their initial investment. That's they are in for, ultimately. And if they sense that your idea and your team offers them an opportunity to multiply their return on investment many, many, many times over, million times over, they will put their money into your company. Now, how to succeed with investors? So there is a plan. You need to show that first of all, you need to show traction on the demand side and the supply side. And typically for marketplace businesses, so you have to first start off with one side. So most successful marketplaces they start with building the supply, because the understanding is that a good supply brings demand. Like Thumbtack or Amazon, they all started with building their supplies. There are some exceptions, but most marketplaces start off with supply. So if you have signs of traction shown by that, if you show by the number of users you have, in like traction would be shown by beta users, but then how many of those beta users are of you're retaining, and if you can see signs of a product market fit, that is what will be very interesting to an investor. The second thing that they're looking for, how to succeed with investors is, do you have a market tested and a differentiated value proposition? Now, what I mean by a market tested and differentiated value proposition is, how have the customers responded to your value to your product? What do your metrics look like versus your competitor? What are their reviews like? What do they say on social media? What's the churn like? So that would tell me, like, this is a market tested and a differentiated value proposition. Given the choice between your product and the competitor, the customer sticks on your platform. So that's that's another example of being market tested. The third thing investors are interested is in unit economics. By unit economics, I mean the customer acquisition cost and the lifetime value of your customer. So remember, your customer acquisition cost should be like ideally be less one third of your lifetime value of customers. So if it's more, then your business is not really viable. It's not going to be profitable, and it's not really interesting to an investor. The last thing is the investors look for is a team that can quickly respond to market and show signs of active dynamic grid. Just to summarize, if you want to be successful in raising money for your marketplace idea, so you have to show a business and potential for growth, exponential potential for growth, and that if investors sense that they're running your way. And in a marketplace business, it is easy once you have built supply and demand, and you have network effects, your word of mouth, and people love your product. They'll leave rave reviews. That means that investors are running your way, running your way. And then team is always greater than product and market. Yes, I kind of flipped it. It should be team should be greater than market, should be greater than product. That means you're always serving a growing market, which there is a need, and your team is pretty enough to respond to change, change in market dynamics. The third thing we have discussed is unit economics. Competitive barriers to entry can make and break your deal. Given everything else is in your favor, like you have a growing market, you have a great team, but then if your unit economics don't make sense, then it may not be interesting. It will not be interesting to an investor. And then, last but not the least, it's easier said than done. It's definitely reasonable, so I get it. So hopefully you found this video useful. If you like, you can subscribe to this channel. Send me an email with your feedback. I would love to hear more from you. Thank you for watching. Thank you for your time.